honored to get to moderate and have this discussion with all of you here today. And I'll start with Chairman Hunt. As an employer and a successful businessman, you've long advocated for higher education community to set goals and use data that really meet employers' demands. This last session, HB 8 was passed, and it radically transformed how community colleges are funded. As chairman of the commission that made these recommendations, can you tell us more about what it provides and why we have that need for that transformational change?
Thank you, Ruth. So as we all know, we live in a state that really has a hyper-competitive business environment, and that's driven by tort policy, tort reform, tax and regulatory policy. You know, it led to a 16% growth in our population, 4 million new residents between 2010 and 2020. But I think the question our commission faced was, it's not just about quantity, it's about quality as well. So are we having growth with prosperity, growth without prosperity? And our focus was really, if you want growth with prosperity, the question is, the jobs that are being contributed, that are driving that growth, are they self-sufficient jobs or not? And the definition of self-sufficient is a job that can support the job holder and his family without government support or assistance. And so when you put that as kind of the measure, you have to ask yourself, you know, where is Texas on delivering, you know, growth with prosperity, growth with self-sufficient jobs? So when you, and those jobs today are increasingly defined as jobs that have a post-secondary credential. In other words, the correlation between income levels, self-sufficiency, and post-secondary education levels is very high, and increasingly so. So when you take those metrics and you look at Texas, we looked at data that went back as far as 1980, at which point the Texas workforce, 25 to 64-year-old population in terms of post-secondary attainment, were in the second quartile. We were 3% above the average for the country, right in the middle of the second quartile. Fast forward to our most recent census, 2020, we were in the top of the bottom quartile, number 39. So a really slow decline, and this wasn't that we weren't absolutely better educated in 2020 than 1980, we certainly were, but our improvement has been and has continued to be slower than those that we compete with, other states and other countries. Today we're number 42. So we took that information and we looked at it and said, we have to come up with a policy intervention here that first is going to stop the decline and then put us on a glide path back toward a competitive, hyper-competitive educational attainment level in our workforce. So that's really what drove our policy recommendations, that this was not a time to be incremental. It was really a time to be transformational.
Thank you for that. And Commissioner Keller, you're a data guy, and we all know that the success of the Tri-Agency Commission is going to rely heavily on our ability to use it and to utilize it. Can you speak a little bit to that?
Yeah, so we have incredibly rich data in Texas, and we at the coordinating board are actually by statute the stewards of the combined educational and workforce data infrastructure. And one of the things we've been working on with support from Governor Abbott and the legislature and philanthropy is modernizing that infrastructure so that we can make the data more useful, more actionable. There's a connection with that and the work and the vision of HB 8 and the Community College Finance Commission. So the idea behind this comprehensive reform of community college finance is that we're moving to a much more dynamic outcomes-based formula, moving away from funding the colleges on seat time and more funding them on especially producing what we call in Texas credentials of value. We look into that data and ask if students are better off for earning those credentials and provide even greater incentives if those credentials of value are awarded in high-demand fields based on what we're seeing happening in our regional and in our state labor market. So we're actually the first state to condition our higher education goals on the value of the credentials in our economy. But the way we've been funding community colleges historically didn't have anything to do with that. It really was based on seat time and how many courses the colleges were teaching in different subject areas. So as Grayson College or I see folks from San Jacinto College and Lone Star and other places, we're doing great work to streamline their programs and get students through faster and have fewer excess hours. The state responded by actually cutting their funding. So in this new funding system, the idea is to have an outcomes-based system with predictable revenue streams directly tied to the production of those outcomes. There's also a component we can talk about to stabilize funding for our smaller rural-serving colleges as well. But to make all that work, to your point, Secretary Hughs, we've got to make sure that we have timely and actionable labor market information that we can provide to the colleges. Actually, this next week, we're going to be training 100 individuals from colleges and universities across the state on the use of new data tools we're able to provide through this new infrastructure, including labor market information, so we can provide much more timely and actionable information to colleges across the state that will help them leverage this new community college finance system.
That's great, and it's so important. We've been hearing all morning about businesses and the needs that they have and how we're going to grow our workforce, and at the end of the day, we need to have these individuals graduating with degrees and certificates that actually match jobs that are out there for them. So it's an ongoing work that you've all been at the helm at, and I'm excited to see that now we're going to transformationally as a state make it be something that really has connectivity and accountability in a way that we can track and really make sure we continue to meet the demands of employers. So Dr. McMillen, it's very difficult to really convince large systems to change a model that they benefit from financially. And really, HB 8 is a radical transformation of how community colleges get funded now that funding is based on successful outcomes. So can you speak to us a little bit about why you believe that 50 community college systems unanimously supported HB 8?
Yeah, Commissioner has talked about when he's traveling the country, and it happens to me as well. How do you get 50 community colleges to agree on something? And we have 50 community colleges in Texas. Everyone's agreeing that we needed this. And so I think there's a number of things that are important to consider. First off, we were on a journey to improve student success and have students be more successful, and we've been doing that for many, many years. At our college, and you gave the example of doing good things to help students be successful, and it actually leads to less funding for us if we do the seat time model. We cut out 7 classes towards degrees for our students because we did better advising and a lot of different things, but that was in the best interest of students. And for you, from a business perspective, more than a year off of their time to degree, so they were out in your workplace and helping build our communities a lot faster. So we have a long history of trying to do more with the help of our Texas Success Center and the Texas Association of Community Colleges to help students be successful because our hearts are focused on the North Star of having our students be successful and having our businesses thrive after that. So that long history coupled with some very strategic planning in terms of laying out a policy framework and timeline through the commission. Woody, thank you for your leadership and thank you for your support through that process. And TAB was involved in the Business Advisory Council, so engaging everyone and having everyone at the right time and right table. Also luck, we had money in the state coffers to be able to add funds to community college funding. But at the end of the day, the system was 50 years old, and we're solving problems that are not 50 years old. We want a future for Texans that are radically different than what was designed from 50 years ago. And I'm proud to say that we all came together around that notion and built trust and are willing to walk forward to help make sure that you all are successful so that when I retire, we have the quality of life that we do today at least, and maybe perhaps better. And so I'm so grateful for the policy change.
Thank you, and I know that's something that really, before this, you were already working towards and continue to, as does Lone Star College, and thankful to Linda Head for their leadership in that. Do we have other community colleges represented in the room today? Will you raise your hand if you are? Great. Well, thank you for being here, for being a part of this conversation that ties in so importantly with our business community. Chairman Hunt, what is your vision or what are your goals for HB8?
Well, at the macro level, what we've really done, the state has laid out as the largest funder of our community college. They've laid out their vision of a competitive workforce, and for the first time, they've said we're prepared to be a partner financially. Most of the workforce education done by community colleges has historically been in the continuing education area. It's been non-credit. The state doesn't fund or hasn't funded non-credit. So you've really had, not a state vision on a competitive workforce. With HB8, the state is now saying we're prepared to fund credentials of value, whether it's a credit hour or a non-credit hour that went toward that credential of value. So essentially the state is now a partner with the community colleges and with our employers on the creation of any credential of value. Secondly, even though the funding was a $680 million increase for the biennium, it doesn't really stop there because typically the state will allocate X amount of dollars, and then the institution, or in this case 50 institutions, would kind of compete to see how that's going to be divided. We have, in this case, a different funding model in the state saying if you produce more credentials of value, there is no limit to how much we're going to fund. So we're your partner all the way. So now if you're a CEO of a community college and you're thinking about making an investment that might start not delivering degrees for 3 or 4 or 5 years, you've got the confidence of a return on that investment because you have a partner that is committed to paying you if in fact that's is a credential of value. So we've totally changed the incentives, aligning the state as the regulator and as the visionary with our community colleges and with our employers now, who can feel that they've really got a financial support at the state level as well, and a tool when they sit down and talk to community colleges about programs that are specific to their workforces.
Thank you for that, and I do think that's our secret sauce, is that relationship between employers and our government and the way that we're working together and creating more alignment. Commissioner Keller, what barriers do you see that might exist that are going to prevent that seamless flow of information between educational systems, employers, and employees to really access that real-time jobs data?
So we're moving very fast right now. So this is not tinkering around the margins. We've completely overhauled the entire community college finance system. And as Woody alluded to, that range of credentials that we're funding includes a number of short-term workforce credentials that the state had never provided funding for. The state had never tracked data for, and frankly, many of the colleges hadn't tracked data for. It was sort of operating more in the margins and continuing education programs. But those short-term workforce programs are increasingly important if we're going to stay competitive, especially if we're going to reskill and upskill our incumbent workforce. So we're bringing now those other kinds of credentials that are credentials of value into the finance system. That means we have to change the way data comes in to the agency. It means that we have to change the way data is collected within the institutions. And we're moving very fast in partnership with the colleges to be able to do that. So by this next year, we're going to start including what we call third-party credentials, like some of the Google career certificates and certificates from IBM and those kinds of things that translate into real tangible value. And many of these are offered in partnership with community colleges, but again, we just hadn't really recognized those within the system. So that's the direction we're moving in, but we do have to connect more data in new ways. We're also having to re-architect the way that the data comes in and then is reflected back to the institution. So what historically happened would be colleges would report data. There'd be a couple of weeks of identifying errors and back and forth with the colleges, and eventually that data would be certified, and then we would produce a report. that could be months late by the time the report actually comes out. The data would be very good, but it wasn't really timely and actionable. What we're working on now in partnership with the colleges and already starting to roll out is more when the colleges report data to us where we can automate identifying the errors, be able to transform that data, reflect it back to the institutions. So Jeremy and his colleagues will have better intelligence that they can use to make important program decisions while it's still timely and while students are currently enrolled. That's a fundamental change in how we think about using our data from more of a regulatory purpose to more of an emphasis on informing decisions.
And Dr. McMillen, can you speak a little bit about how you see implementing changes to Grayson College in this post-world of HB8?
First off, just the structure is really important for our college. We're a college of 4,250 students. We grew by 8% this year. Texas Instruments and Global Wafers are going to double the total property value within our tax base over the next few years. So we have been a college that's been in steady increase, improved quality, been doing a really good job increasing graduation rates and having more students be successful with us. But we're about to go through dramatic and rapid change. And so you just heard my colleagues talk about the importance of the dynamic funding model. In the past, when we would go through that type of dramatic change, I might wait a year or two, or sometimes 3, after starting a program to start seeing return on that investment. That makes it difficult for me, and the conversations with business you don't really understand that. Now the model is much faster, and that's really, really important. The other conversation around short-term credentials, at our college we train about 1,000 students a year using the Skills Development Fund, working with our local employers and upskilling them. There are a couple of important changes. Yes, we've received funding from Skills Development Fund, but now we're going to change the conversation to those need to not just be specifically what that employee needs, but we need to focus on completing a credential, because I don't get any state funding now unless they do complete a credential. That's good for that student, and also is good for the state as that student moves around the state with an industry recognized credential. When I talk to businesses, they don't understand the difference between non-credit and credit. That's something that makes sense on the higher ed side. You really need somebody that can do the work that's required of you. And the other thing that students need us to do is not pay as much attention to those differentiations either, and stack their credentials over time. So we're reevaluating our entire curriculum, making sure that we have stackable credentials from our non-credit to our credit. The new funding model, it's very simple. If it's a certain type of certificate, there's this much reimbursement to the college. It's a straight line. It is highly focused on regional differences, and so that's a really good improvement. In the past, there was a funding model that allowed us to incentivize those high demand occupations. About 40% of the data, it was actually incorrect about what was high demand. Speed of data, feeding that back in, focusing on a region is going to let us pivot and make sure that we're focusing on the right things, so we graduate students who go to good jobs that build our community. One thing that's important about the program is there are extra bonuses for certain types of students, and so academically or economically disadvantaged students come to us with different needs, so we have a 25% bonus for those students. One program I would focus on that we're working on launching at our college, the commissioner has a passion for adult learners, and so there's an adult learner bonus in this program, so it's a 50% bonus in funding. So if a student earns their credential when they're 25 and older, and there's some little tweaks to that, but 25 and older, 50% bonus. So we're going to market to adult learners to re-engage them. We have 800 students that are 25% away from a credential. Not only are we going to work with them to finish at Grayson, we've pulled in a university to cap off a bachelor's degree through a credit-based CBE program at Techies, but just trying to focus on making sure that they are able to move on and finish their credential. They're working. That's why they're not enrolled. We want to make sure that they finish their credential, re-engage them. Lots of other programs in mind, and I could probably talk all day, but it's really reshifting all the things that we do. When I had faculty and staff conversations, I said, in the past you were paid if a student was not, they weren't paid, but we were paid if a student was in a course. Now we need to really focus on having students complete their credentials. And that transformation in mindset is a 50-year-old mindset, and so we'll re-envision ourselves, and please work with us as we're rebuilding ourselves.
Could I underline just one
yes,
point
please.
that Jeremy made that I think is so important is that, so if you zoom out and you look at the demographics for Texas and educational attainment for Texas, we have, in the latest census data, we have nearly 4 million working age Texans who have some college but no credential. And we actually have about 2 million Texans that don't even have high school diplomas or high school equivalencies. So that's a tremendous drag on our productivity as a state. And frankly, we've just not done a very good job strategically serving those populations. And so one of the important facets of HB8 is really to get behind the community colleges in serving those adult learners, getting folks to completion of real credentials of value. And we are, even as an aside, even creating a new high school diploma that'll be awarded through community colleges for adults. That it's going to be a new competency-based high school diploma. So there's a strategic focus on increasing educational attainment, especially for our adult population that we've never had before as a state.
And I think it's important to add to that, based on the research done by the coordinating board, we know it costs more to have an educational outcome, to get a certificate at value, if you're economically disadvantaged, academically disadvantaged, or you're an adult returner. And so the structure of HB8 has incremental, as Dr. McMillen alluded to, has incremental payments to cover that additional cost. So that's a way of trying to close some of the equity gaps that we have in our educational attainment in our population, which are absolutely critical given the demographic changes to a competitive workforce of long term. We've also significantly, the community colleges financial aid program was always at a small fraction of the Texas grant program, which is for the 4 years. So the TEOG program, which is the community colleges, has now been brought to parity for our 4 years. So it's another way of making access to workforce education much more affordable as we drive toward a more competitive workforce. So lots of pieces in here, but they essentially all tie back together to producing a higher level of post-secondary attainment in our population and our workforce.
That's great. And in your experience, how well have employers and educational systems kind of worked together to meet employers' needs?
Well, I think historically, and this has been pretty well discussed, we just didn't have an alignment of incentives. The community colleges were paid on enrollment or seat time. The state had no support for workforce non-credit education, and so and no payment focused on outcomes. So as we've moved to an outcome model, and we've brought the non-credit hours and treat them equivalent if it contributes to a certificate of value in the marketplace, we align those interests. So I think for the first time, employers, community colleges, with their partner, their financial partner, backstop being the government, will be able to communicate to each other, and everybody will be aligned in the same direction and not have these constraints that existed under our previous, really long-standing 50-year funding model.
Right. And I'll say, when the governor first became governor and issued the initial charges for the tri-agency work, that certainly was that tripod of the Texas Education Agency, the Higher Ed Coordinating Board, and of course the Workforce Commission. And thank you, Commissioner Esparza, for being here with us today, and former chair, now director of Texas EDC, Aaron Demerson. We're so glad to have you all join us, and Adriana Cruz, of course, from the governor's office. And the reason I mention them specifically is because that does bring together the educational part with the workforce part. And for the employers in the room that aren't familiar with the resources available at the Workforce Commission and some of the things we're talking about up here, I highly encourage you to get engaged, because it really does connect employers to a curriculum that's specifically tailored to them, and that community colleges can then help to ensure that you have the employees you need in the future, and that our fellow Texans have that integrity of a job, which is really often the purpose of getting an education and making sure that you can make a living to support yourself and your family and continue to grow our economy. So I'm very grateful that we're able to have this conversation and really share more about the great work that all of you have been a part of with HB8. And I'll leave you to some closing statements then as we get closer to the end of our time. Maybe I'll start with Dr. McMillen and come down.
So I always tell everyone that our students are amazing and our communities need them, and I believe that. I think this work furthers that effort. We do have some really challenging things ahead of us as we grow. We've launched 3 new programs in support of Texas Instruments. Very expensive to build that equipment, but we're committed to that. We've launched a Texoma Promise program, which is a guarantee of students to be able to go to college. As a result of that, right out of high school, as a result of that, 35% increase in enrollment. This will help us lay out additional clarifying and simple pathways for students to become successful. We'd love to do that same thing with our workforce. When you mentioned the adult learners, 80% of the students at my college and most other community colleges are working. And so there's a huge opportunity for us to engage to help those employees move up and move into the next level. We are here. Please reach out to your community college. They want to do everything that they can to help you transform your region.
So with the passage of House Bill 8, so Texas as a state really put a marker down for kind of a new era of how we would support our community colleges with outcomes-based funding, with more room for innovation, with predictable revenue streams that are tied to credentials of value, and as Jeremy mentioned, recognizing that there are some students that have additional costs associated with serving them, like re-engaging adult learners. There's also an element of the funding system to stabilize funding for our small and rural serving colleges. So we're really getting behind our community colleges and our community college students in a way that we never have before. This is on the order, the starting point that Woody was talking about, on the order of about a 30% funding increase for students and for our colleges as a new starting point. This has gotten attention all over the country for a new dynamic model that's aligned with our vision for building a talent-strong Texas. But I would also want to emphasize another point that Jeremy mentioned passing is that so normally, if you're going to completely rebuild a state finance system, so the legislation would be passed, and then it's going to take you about a year of planning and collecting data and developing rules. Because of the close partnerships across the community colleges with the state leaders, House Bill 8 not only passed on final passage unanimously in the House and Senate, there were 0 amendments on the House floor. I had never seen that before. Right? Every legislator had a letter on their desk signed by all 50 community college presidents that they were getting behind this new vision for community colleges. We adopted emergency rules less than 90 days after the bill was signed, and House Bill 8 is in effect today. So that would not be possible if we didn't have the strong working relationships with the state leadership, the strong support of the governor, Lieutenant Governor, the Speaker, the Senator Creighton, and Representative Van Deaver, who authored the bill, but also and especially partnerships with all 50 community colleges and with the Texas Association of Community Colleges. So Texas is not only setting a new standard for policy innovation, but in policy implementation that is really staggering and setting a new marker. And of course, we need to be able to move at the speed of 21st century Texas. So it's so excited for this new opportunity, thanks to the work of the commission and thanks to this legislature.
So I'm very optimistic that HB8 is going to be able to stop this long-term decline that we've had, although the reasons for those declines are complex. A lot of them are demographic, so it's not going to be easy, but I'm optimistic that we'll stop that decline. I'm also optimistic that as we become more competitive, we're going to force other states to move in our direction of being more competitive in their educational attainment. So in that sense, we'll make a contribution to the competitiveness of the country. But being optimistic is not the data, and so I think it's very important for us to hold ourselves, the community colleges, the coordinating board, the business community accountable and be very transparent. Where was the baseline? How much progress are we making? Are we achieving what we laid out? Are there some barriers that need to be removed so we can be more competitive? So we shouldn't be complacent that we've got this, we found the magic bullet, so to speak. There's a lot of hard work in the implementation, and the community colleges and the coordinating board, I think, well understand that. But we don't just need to talk to ourselves. We need to make sure that the state understands where we are, where the trends have been, and where we hope to go with new policy and new funding levels.
Thank you. Well, thank you, gentlemen, for your time today and for everything that you've done to keep Texas the best state to live and raise a family.